Okay. Hello, everybody. Thank you very much for attending today's webinar. I have with me a couple of clients today. I'm just been having quite a few technical difficulties, unfortunately, with another client. Hopefully, we'll get that resolved shortly. In the meantime, I'm going to run you through a few scenarios, introduce our lovely clients today as well, and we'll go through a bit about what we've been doing lately with their permission, of course. What I'm going to do now as well, just is to quickly share my screen, and we'll continue on with the introductions shortly. So first and foremost, I'll get the boring stuff right out of the way, and that's the disclaimers. So my name is Justin Ishac, and this is only general advice. Past performance is not a reliable indicator of future. Seek independent financial advice before investing. The information provided here today is purely for educational purposes. Okay, so I guess, before I proceed with the introductions as well, given that we are waiting for another client of mine to jump on board, I'm just going to quickly illustrate some of the client performance. So this in front of us is actually, as you can see, Michael, which is not on the call just yet, but hopefully he'll be on shortly. And essentially, this is showing us obviously $150,000 return, right? And 35% for the period. Now, yes, it's $1 million, but that's because we actually invested with a much smaller amount of capital. And obviously, the percentage is based on the capital used in the account, right? So just being mindful of that. And so that's essentially what this is. So basically, also moving on to another client's performance screenshot, which the lovely client's with us today, Wendy, and I'll introduce her shortly as well. But as you can see, we've got here obviously about $120,000 return and about 33% for the period as well. Similarly, we used a small amount of capital. A large amount of it was also invested during this period. Maybe just a little bit in cash from time to time. And I'm sure she'll also discuss this with a bit of detail as well. So nonetheless, obviously we'll get into the topic of the day. I'll just start off with, some opening statements. 3 of them, obviously. First of all, markets reward discipline, patience, and the right advice at the right time. So I think that goes without saying, but it's definitely something that's overlooked. The best time to start was yesterday, and the second best time is now, right? So at the end of the day, if you're sitting on the sidelines and you're not doing anything, these lovely clients are here to also testify to the fact that being in the market is important, and in the right areas is even more important. And if you're not into the US markets, you're not doing something right. Okay. Hopefully, I think I've just gotten Michael on board as well. Michael, can you hear me?
Yes, I can hear you.
Oh, lovely. Welcome. Lovely. All right. So I'll do the introductions shortly as well. And the last opening statement was good advice can change the direction of an entire journey. So firstly, Michael, just a quick reference. I did display your portfolio here as well. And I did mention that this was the total return basically as of yesterday, screenshot, and that the bulk of the capital was used, but we used a lesser amount to get this return, which is why the percentage is obviously a little less given the value. Would that be correct, mate? Just to quickly.
Yes.
Thank you. Lovely. Wendy's portfolio as well. And so now I guess we'll get right into today's topics, right? So I'd like to welcome aboard Michael and Wendy. So welcome aboard, Michael. Thank you for attending.
Thank you.
Yeah, a little bit of technical difficulty earlier on, mate, but we got there eventually. So thank you.
Yeah.
Lovely. All right. So we've also got Wendy on the call as well. Wendy, if you're available, you there? Wendy? Okay. She might be just having some technical issues herself, I'm not sure. But she's definitely on the call. Yeah, look, we'll get right into it. Maybe she's just dropped off. Maybe there's a bit of an internet connection issue, but effectively, Wendy will also discuss some of her results as well. So today is not about theory. It's also to discuss effectively the client's journeys and how my advice has made a difference to these clients. We're going to discuss the pros, obviously, so the positive returns, but also going to discuss some of the negative results as well. We're going to have an honest picture here. So Michael will also, give his own insight on what we've achieved in either markets and the reason for some of the shift as well, which we'll happily go through. So any questions you can ask towards the end of the session as well. I will be running a poll, ladies and gentlemen, at the end of the session as well. Okay. So first of all, Michael. So if you don't mind, what were your goals when we first started, mate? What were your thoughts and what were your goals?
Well, I'm retired now. So basically, whatever I do now is an income stream. So, I mean, before when I dabbled in the shares, I didn't use anybody else. It was more just for my benefit, just see how things were going. But since I've retired now, it's more critical because the problem is when you do it on your own, you tend to just hang on to shares because you've had it for a while and things, and hopefully some are going up and some are going down, but there's no real strategy. But now, since you've taken over, it's a totally different outlook. So now it's not a case of just holding onto your shares. It's looking at the market and putting your money and shares where it's going to have the most benefit.
Lovely, lovely. Well, thank you for that introduction. Definitely. So, in summary, it sounds like now you do feel like there is a little bit more guidance and a bit more conviction in your movements with the market. Would that be fair?
Yes, that's true.
Lovely, lovely. And I guess, if I were to sort of ask you the next question to that, really, which is, how did you feel when, for example, you started to see some of those names like Rigetti, IonQ, and some of those quantum plays really start to move? What were your thoughts? What was your experience throughout that? Do you want to share that?
Yeah, it was quite encouraging, actually. I mean, to see with the right advice how quickly your portfolio could grow. So, and the strategies that you use,
Yeah.
because it's not something I would have done on my own. So, I most probably would have just bought something and held on it for quite a while, with just bearing the consequences of what happened in the end. So.
Yeah, yeah. And so I think that sort of leads into some of the main things that a lot of investors really struggle with as well, Michael. And that's a really good point, is that they sort of hold on to positions for too long, or they hold on to positions that they shouldn't be holding on to, as opposed to getting rid of things when things go south, right? Sometimes it's best to cut your losers and move into the positions that are looking good, in terms of their estimates, in terms of their outlooks, etc. And by doing that, you cut the dead weight, right? And you actually move your capital, you move bad money to good money, right? And you fix the problem, because we can't get everything right all the time, but we can adjust. Will that be fair?
Yeah, that's quite true.
Yeah.
I mean, that's what we did with the Aussie market.
Yeah.
We basically just
Yeah.
cut our losses on that and put it into the American market where we gained.
Yeah, exactly. Well, that's right. That leads us to the next part, exactly, and mate, and that's that. The honesty here is the reality of the situation, and that is that we did have some losers in the Aussie market, that's for sure. And unfortunately, we did get a bit of a drawdown in some of those positions. There were some winners as well, but they were more so really offsetting each other as opposed to getting you the result that you needed, right? So the general advice, and you can correct me if I'm wrong here, Michael, was to move basically these positions into US equities, and we recovered very quickly. And if anything, we've actually completely outperformed now. Would that be fair, mate? Would that be a true
That's
statement?
quite true.
Yeah, lovely, lovely. And you know, it also, if I go back to the specifics of one of them, if you don't mind me saying so, Michael, you know, I think there was Woolworths, right? The most defensive supermarket staple, right? Um, and you know, you would think this is a business that you'll be right for reporting season, and the vast majority of analysts would be very positive on Woolworths, right? Yeah, we saw a 20% drawdown roughly. So, you know, this was something that we acted on, and we moved and corrected into areas that obviously basically wiped out the red, turned it to green, right? So
True.
essentially, yeah, great. Did you want to add anything to that, Michael?
No, no, I suppose yeah, the strategy you used was good. I mean, it was helpful, good, and beneficial.
Yeah, yeah, lovely. All right. And so I guess, you know, leading into the next part, which is September's move, right? September's move was pretty big. We saw quite a bit of a move into the market. Um, you know, what were your thoughts and your reactions to some of these movements outside of the quantum names, even like your Teslas, our ETF recommendations as well? You know, because we did have specific ETF suggestions that really moved the needle for the performance as well, right? So, what was your
Yep.
view? How did that sit with yourself? What did you think?
Oh, it sat very well because I mean, I wasn't going backwards; I was going forward all the time. So
Yeah,
uh,
yeah,
it's not
What
that
did
I
they?
understand much of it,
Mhm.
because basically it's not something I, I fully understand. Put it that way.
right.
I mean, I know shares go up and down, but understanding uh, where they are, what their performance is, what their outlooks are, and all is really
Yeah,
for people who do it all the time rather than for, as I'd say, home investors.
yeah, yeah, yeah. Of course. And so, you know, that's quite common at the end of the day. But I guess it was a positive experience nonetheless. And you know, outside of that, you know, obviously we've got a few other things in relation to that. We've had in this entire time the issues with
Sorry.
That's all right. The issues with Donald Trump and all of the concerns that most investors had, which is basically, well, you know, Trump is in power and he's causing havoc for markets, right? Um,
True.
so the misconception for a lot of us Aussies is basically, I don't know if we should be investing because I'm worried about the headlines. I'm worried about what Donald Trump is going to say. I'm worried about what's going to happen to the market because of X, Y, Z in the US. Um, and so, would you agree, Michael, that this is a bit of a misconception and that's not true, and clients are really missing out by not being invested in the US? Would you agree with that?
Yeah, I agreed it because I think the problem is the media hate him. So the
Yeah,
media just emphasize everything that he does that is wrong, but they never emphasize things that he does that are right.
yeah,
So
yeah,
the problem you got, most people, I suppose, like 90% of the people just follow the media and they think it's all bad, but it's not. So
yeah, yeah, yeah. That's fair. So, you know, at the end of the day, without being political, I do agree. I agree. I think there is a lot of misconceptions and a lot of missed truths that aren't really displayed as well. That's for sure. Um,
yeah,
But yeah, okay, great. So the real sort of answer here, I think, is that the misconception of media really tends to sort of concern investors from getting invested in the US market. And I think that's something that a lot of investors really need to start changing their mentality on. Um, Particularly given, as you've also mentioned, Michael, that we had some losers in the Aussie market that we moved from. And you accepted the general advice, and the portfolio is here where it is today, right?
true.
Um, and, you know, unfortunately, we went through some red and we moved into a lot of green, right? Greener pastures. And, you know, that's something that I'm trying to encourage a lot of other investors to really see at the end of the day, right? So, What would you say, Michael, is the biggest difference, about your experience compared to investing on your own, working with us here at Sharewise with myself?
Well, the biggest experience would be that the balance is a lot healthier. The problem is when you invest on your own, it's more sentimental. So if you've had a share for a long time, you're a bit sentimental towards it.
Mm.
And it also takes out the guesswork, because really we're just guessing whether a stock will go up or down. So,
Yeah. Fantastic. So basically, it's removed a lot of the guesswork for you, and you can see a little bit more confirmation, understanding of what you're buying in terms of investment decision. Would that be fair?
yes, that's right.
Lovely.
I
Lovely.
suppose the other thing also, like going through a broker like yourself, is you're studying the markets. So you got a better insight into how stocks could be performing. Whereas for me, it's just what I see on that day, or it's what I hear other programs talking about, that
Yeah.
I base my judgment. So
Yeah. And I think, sometimes as investors, when we fall into that trap as well, leading into that, we can actually miss the table, right? We can buy something that's been mentioned in media a little bit too late, or a thematic or an area, and then we get trapped, right? And that then puts
yep.
us back in that cycle of, oh, I'm down, right? What do I do now, right? So,
Mm.
and it's a very, very true statement. So thank you for that, Michael. I appreciate that. And I guess, one of the last questions I'll sort of ask you, mate, without interrogating you too much here is,
That's okay.
what would you say to someone thinking about working with me? What would be, let's say, a statement that you would say is true, factual, and at the same time, you'd be happy to leave as a testimony to work with me?
Yeah, I've been very happy with your service. It's always positive. You always, whatever we buy, anything, you always explain ups and downs, and what you can see could be the inside going forward. So it really helps, because it takes the burden off me, really, because I'm just listening to you, getting all the advice, and then deciding whether I take the next step or not. So
Lovely. So, thank you for that, Michael. That's really, I think, pretty accurate, because when we talk, I give you the reasons why we like it as a stock or as an ETF or as a thesis, but I also present the reasons why there could be risk, right? And I would recommend it with the general advice saying that we're looking at buying XYZ stock. This is the reason, Michael. We like it. We think it's worth investing in. We're targeting 30%. This is what other brokers are saying as well. This is the fundamental thesis. If you're happy to proceed, right? And at the end of the day, we also discuss, when you ever want to go into more detail, any potential risks as well. So that's fantastic, mate. Look, thank you very much for all of your input there. It's been really appreciated. I'm going to try and see if we can get Wendy on this side again. Wendy, are you there?
Yep, I'm here.
Oh, there she is. Lovely. We had a bit of technical issues. How are you?
I think, yeah, no, it's all good.
Lovely. Well, thank you for coming on board, Wendy. We won't hold you being a Manly supporter against you. Don't worry. All right.
It's all good.
Lovely. So, Wendy, as well, if you don't mind me relaying some of these questions to yourself as well, what were your goals when we first started here working together?
I think my main goal as a self-funded retiree was to increase the income coming into my super fund. So I was getting, I don't know, 6 to 8% where I had it before. So I was thinking, oh, if I can get 20% per annum, that's got to be at least twice as good. So I was blown away, obviously, by the 30% that we've done in 3 months. It's just blown my mind beyond any expectations. So yeah, that would have been my main goal, was just increase the profitability in the fund.
Yeah, great, definitely fantastic. And that's lovely to hear that obviously it did exceed your expectation in such a short period of time. And hopefully we can obviously do a lot more, right? That's the goal. We're going to keep kicking the
Absolutely.
goals. Definitely. And obviously the next question as well, which is, how did it feel when you started to see, some of these, stocks like in quantum computing, artificial intelligence, and your experience in the US market in general? When you started to see these names really run, even the ETFs, what were your sort of thoughts here?
Probably, to be honest, I was like, oh gosh, I hope it can continue. It's not just like a short little bubble or something.
Yeah.
But it did. It just kept growing and growing. So that was very reassuring. Yeah, it just blew my mind actually. You sort of opened me up to a heap of investment opportunities that I wasn't aware even existed, and they've turned out to be little gold mines. They've been wonderful.
That's amazing. That's amazing. Love that's excellent. I'm so
Mm.
happy to hear that. And I think you mentioned as well that some of the trades we've taken, you've also replicated for yourself as well.
I've got my own money I look after, so a lot of them I'd look at them and say, oh, it looks like it's going to be a good, and so I'd put my own. And a couple of them I doubled my money in like 3 weeks.
Wow.
So I was very happy with that. Now I'm like, oh, I wish I'd put more in.
That's always the case, that's for sure.
Yeah.
Lovely. That's good. Lovely, lovely. All right. Well, we hope to continue to see more of that, throughout
Thank
the
you.
next quarter, as well, all the way throughout the next few years working together. So
Yep. Absolutely.
fantastic. And obviously September's move was pretty big, right? We saw quite a big move in September, um, which really outperformed a lot of the other months as well. And historically, September is usually quite a volatile month, right? So what was your reaction when you sort of saw the movement that we did have in September, which really pushed the portfolio a little higher in that period?
I think you hear about other people having like good windfalls and positive investments, and you think, oh, I wonder if that'll ever happen to me one day, especially when you're looking after it yourself. It's like, yeah, you sort of feel like if you've got 10% or 20% on a profit, you've done well. But these were just amazing. I was blown away. Yeah.
That's awesome. That's awesome. Love to hear it. That's fantastic.
Mhm.
Well, hopefully at the end anyway, we're going to have another strategy session between me, yourself, and obviously all my other clients as well, including Michael, around a couple of other gems that we're looking at the moment for the next month and quarter, leading into the end of the year. Excuse me. So we'll have that conversation as well, and I think these ones will really outperform what we've already done, by the way. But I guess, leading into that as well, Wendy, in terms of the fact that most investors sometimes see, a stock run significantly and they sort of sit on the sidelines and they say, I wish I was in that stock, right? How do I get in that stock? I think that's happened to many investors. It's happened to, I think, even myself as an advisor, right? I see a stock and I thought, I wish I recommended that to a client. All
Mhm.
honesty. But the reality is we've been getting a lot of these lately, and it's not luck because it's more than one. It's 4, 5, 6 of them, right? And so, that there's a common theme, and the theme is that the advice is pretty strong in growth. That's for sure. I would also add to that. So thank you. Um, what would you say? Because I mean, if you don't mind me saying this as well, Whitney, I think prior to working with me, you were working with another broker, which I don't have to disclose, but or another firm essentially. I think it was a very well known firm globally. And if you'd like to share that, you can. But what's the difference about this experience that you've had with myself compared to the experience you've had with them before coming on board?
I think the biggest thing for me was letting go and actually trusting somebody else to do the whole thing on my behalf and take the emotion out of it, which has been great. I did give that other broker some advice that I'd been given, which was basically once you're retired, you need to be in like fixed interest investments. And so, of course, the returns weren't going to be there. And it was the wrong advice for me. I really needed to have income coming in. So, yeah, it was just a change of thinking completely, almost like a 360 or 180 degree turn from this is where you need to be investing as a retiree to let's just do it and have somebody look after it that knows what they're doing, obviously. So no, it's been awesome.
It's also lovely.
Yeah.
So obviously, just to sort of tweak some of that, if you don't mind me saying. So, when we provide advice, it is general advice. So that means that at the end of the day, my clients, ladies and gentlemen, they still make decision to go ahead or not, right? So
Yeah.
we essentially assist to manage to an extent, right? We give the advice, we give the research, we give the reasons why we like it, we give the downside risk as well. But at the end of the day, Wendy, Michael, and my clients, they're actually taking the risk, right? They're saying, yes, I believe that what you're saying, Justin, should work out. Okay, let's do it. Let's take the trade, right? So, a lot of credit goes back to yourself as well, because you clearly accept to take these opportunities, which are higher in risk, in some of the trades we've taken, right? And obviously some of the lower risk ones as well, clearly. But lovely. All right. So what would you say to someone, Wendy, who's thinking about working with myself, as, a sort of a takeaway message, if you don't mind sharing?
I would think give it a go, even if you're not prepared to put all of your money in, like have Justin manage all of it, like give him half of it or a percentage and just see how you go, and then add more in as you get more comfortable, because it can be a bit of a scary thing. You hear horror stories about people losing money, but obviously for me it's just been a wonderful experience, and I'd say just go for it. You're wasting time if you don't. As Justin said, if you did it yesterday, that would be, but today's just as good. So get started. Don't wait till tomorrow. Yeah.
That's it. And this is coming from an accountant, ladies and gentlemen. So that's good.
Yeah.
Lovely. All right. Well, thank you so much for that, Wendy. Is there anything else that yourself or Michael would like to share at all, before we proceed with the webinar? Michael, you there? You still?
Yep, I'm here.
Oh, lovely.
Yeah. To be honest, I'm really happy with the service. It's a good move that I made. And I hope to continue in it for quite a long time.
Lovely.
Absolutely.
Lovely. Yeah.
I'd just say that the way that it works is like Justin's always there if you need to talk to him about anything, if you have any concerns, but I sort of feel he's just looking after it anyway on my behalf and knows more about what's going on. So I can let it go and not worry about it. What was the other thing? There was something else. Oh, it's not like he's gonna ring you every day. Like sometimes you might hear from him twice a week, and that's fine because nothing's happening. We're just letting things roll on. I'm keeping an eye on it overnight, as he obviously is. And then a new trade will come along and you'll get a phone call and say, this is what we're thinking. What do you think? Silly me, knocked back one trade that he suggested 3 times, and I kept saying, no, no, no. And of course now it's gone crazy, but we did have some, but I could have put more in. So yeah, I think sometimes his wisdom is far greater than mine.
Thank you, Wendy. What trade was that? I'd love to hear it. Yeah. No, beautiful. All right. Thank you so much. So, I really appreciate your time, Wendy. I really appreciate your time, Michael. Thank you so much for coming on board today. Now, what I'm going to do is I'm going to continue on, and I'm going to just discuss a couple of things, and you're welcome to stay as well for the other attendees. But basically, how did we, sort of do this, right? So effectively, the Fed's pivot back in August or September was suggesting a potential rate cut, right? So this implied a shift toward a possible September cut, without that commitment, but essentially it gave the market some relief. So the catalysts which essentially triggered the run that we did see in that period was interest rate decisions. And the main beneficiaries were AI, quantum tech, semiconductors, and those high beta ETFs as well. So these are the types of positions that really help my clients essentially outperform. We had to cut some losers in some cases and move the money into these areas. And we were quite, I would say, direct about that as well. And it's paid off. It does. So the rationale was during that time, rate cuts essentially coming, funding gets cheaper, and liquidity hunts growth. So these sectors that I just mentioned essentially were the main beneficiaries, right? So basically, putting that together in a nutshell, it doesn't mean that we always want to just stick to the same thematic month in, month out, because there can be outside risks that we need to be mindful of. And that's what I'm here to also provide. And I do let my clients know when that does occur. We have trimmed some risk off the table in certain times when there were issues that we were concerned about outside of what we think we know as investors, right? And what I was referring to there was really the fact that we could have seen a bit of a pullback in the market based on an over exaggeratory move on the rate cut cycle as well. So we did look at reducing some exposure. And there were some signs of other downside risks as well, which I'm not going to go into right now, just for time's sake. So that being said, we do have a playbook. So we first and foremost look at risk management, stop losses, position sizing, and we do our position sizing when we start seeing more conviction. When we see that the stock looks like it's got a lot more upside and it's showing signs of support, I'll call my clients, tell them, look, we think this is worth entering more capital at the moment. These are the reasons why. Okay. We look at top-down analysis. So we look at the macroeconomic environment, geopolitics, monetary policy, sector analysis, and obviously fundamentals. So the valuations of these businesses as well. Okay. And lastly, we look at optimizing our entries and our exits through a multi-time frame technical analysis approach that I use with my clients, that I've shared with my clients and shown. Not every single time, in all honesty. I think it's maybe been about once or twice, maybe a month, or even just in general, maybe twice, that we've gone through some of these sort of strategies as well, which we're probably due for one soon anyway, and we'll look at that as well. But risk on is where we went, and we went to the names that should have been allocated to in most portfolios, and that was AI, semiconductors, transition energy solutions in some cases, but there were others that were a little more, I would say, opportunistic to allocate to, like the high beta ETFs, TSLL. This is probably one of the main ones Wendy was referring to in our conversation. And obviously PLTU and a couple of others as well. Okay. So rate cuts essentially drove that, or rate cut expectations in August drove the move in September. Okay. And we saw a lot of the names move. But then we also have more of a diversified growth and defensive balance that we could have adjusted to, like some healthcare biotech names, infrastructure, tech stocks like your Microsofts, your Apples, your Googles. So this is taking a growth approach, but with a more defensive view, right? So with a lot of my client portfolios that accepted the risk for higher beta plays, we only looked at some of these names, like your Microsofts, your Apples, your Googles, etc. Right? I guess the closing quote here is outperformance is not luck, it's strategy, and it starts with taking action, right? How do we help you be early? Well, research, we identify emerging markets, trends, and companies before they hit mainstream. We shortlist them and provide them to you as opportunities. As our lovely guests just mentioned, that's exactly what they received. It wasn't just hype. It was, this is what we're doing. This is how we're going to do it. We're going to enter with this strategy if you're happy to proceed, right? These are the stocks, these are the thematics, these are the reasons why. And then we go into the fundamentals. If the client wants more detail, if you want more detail, happy to provide it to you as well. Not a problem at all. Okay. Risk management, every opportunity is sized and structured to protect downside while maximizing the upside as well. So in other words, dollar cost averaging, we might buy one parcel, wait to confirm the support, then add more weight. We may look at reducing some exposure when something's overextended, because it's all about mathematics. If we reduce exposure at a higher level, your percentage win is much higher, and if it does pull back, your risk is taken out of that position anyway, right? So effectively managing risk through probability, numerical movements, and obviously if it's the right thing to be doing in general, given the fundamental thesis as well. So ongoing guidance, we monitor positions, send updates, and adjust as the market conditions allow or evolve. Okay. So yeah, it's your opportunity to act now. So obviously we've got, let's just say, not only a time where everybody is starting to see artificial intelligence become the mainstream headline, but it's actually real. It's used in day to day. And the strategy session that we're going to be discussing, if you do come on board today, we'll go through some of these AI plays that you could look at as well, right? With, again, a bit of a risk-adjusted approach. So exclusive access to the next big movers or the next Mag 7. Again, you'll get a discount on the 5-year. There are limited spots available as well. Okay, so you already know what happens if you wait. You've seen the numbers today. These clients have showed their testimonies and thank them. I thank them very much for that. And this time, the choice is yours, right? Be in early, or again, watch it happen, right? Watch it from the sidelines and miss the boat. But I think the proof is, and the reality is, the Nasdaq is trading at significant highs compared to the Aussie market. And if you're not invested in those areas, you've not done something right. Okay. So let's outperform. And just before I let everybody go, I'm just going to quickly share a poll as well for those that are here to answer, if that's okay. And while you do that, I'm going to just say thank you very much, Wendy, for being on board today. I really appreciate it. Thank you. And Michael as well, I'd like to say thank you very much for being on board today as well. It's been much appreciated. And I guess, you know, at the end of the day, hopefully we'll get some more of these moves and some more returns in the next quarter, and hopefully all the way out to the next X amount of years to come. Okay.
Absolutely.
Lovely. Well, thank you
Thanks,
very
Justin.
much. Thank you, Michael.
Thanks, Justin.
You're very welcome. All righty. Lovely. Bye.
Bye.
All right. So, thank you everybody for attending today as well. And I will let that poll run a little further, and I will discuss that we may also look at some other opportunities, not just in the US, but also in the European market. And if you do choose to come on board today, I may give you a free stock tip as well to anybody that comes on board today. And obviously the clients that I just had on the webinar, they'll also get first access anyway, so I'll be on the phone with them. So thank you very much, everybody. I'm going to end the poll now as well, and I will hopefully speak to you all shortly. Book your strategy session. Let's get going. Thank you very much for your time. Thank you, Michael.
Thanks a lot. Bye.
Thank you.
Realistically, I would say, like, we're outside at the moment. We spoke to you last time, it was